husband and 2 sons. We're also joined by my associate Linnea Ryan, who's also on a huge part of Dairy Women Ireland, and she works from across the globe with us. She's excellent. Thank you, Linnea, for joining us tonight. So succession planning, it's such a huge topic. There's so much in it. There's tax planning, there's communications, there's a lot involved. You're trying to see the future. So tonight we have Chloe Desmond from IFAC in Dungarvan. She's a senior tax consultant with them, but she also specialises in the area of succession. And Chloe is going to give us a presentation about, from her perspective, all the important things you need to consider when we're talking about our succession plan. She has also brought with her one of her clients that she has dealt with in the past, Mary Flynn, also from Waterford, Rathcormac. Thank you, Mary, for joining us. And Mary's going to talk to us about their experience of succession. So without further ado, Chloe, we'll let you give your presentation, please. Thank you.
Thanks, Mella. Thanks, Linnea. Hi, everyone. As Mella said, I'm senior accountant here in IFAC in Dungarvan and do an awful lot of work on succession planning, and something that's definitely becoming more talked about. Not an easy thing to think about or talk about, but has to be done and has to start somewhere. So just a bit based on IFAC, a small bit. So we're one of the top 10 professional services practices in the country with our head office in Kilkenny. We employ over 400 employees and we're 50 years in business this year. Mainly working with farmers of all types, and few names there, big names, household names that you see as well that we work closely and alongside with as well. So succession. So what is succession? So succession is a gradual transfer of management of the farm and the farm assets to the next generation. So it's something that at some point or time has to be thought about and considered and carried out on all farms and all businesses really as well. The challenges we're seeing with farmers are that a lot of farmers are of the older age. So 60% of farmers are over the age of 55 and 20% under the age of 44. IFAC run annual farm reports every year. Our 2025 report came out last week, and quite an alarming statistic that 67% of farmers don't have a succession plan in place, and probably even more worrying, 47% of them don't have a will in place. So really focusing, we've done a lot of work over the last couple of years and focusing on those clients that don't have wills, and then those clients as well that don't have succession plans to ensure that they're there. 48% of farmers say that they don't have a successor identified. We see this sometimes as the main kind of barrier to succession, because that natural successor hasn't identified themselves. So that can be quite hard, but definitely still not a reason to be putting it on the back burner. Nearly even more so of a reason to be discussing and planning and putting that plan in place. So where to start when it comes to succession? So the 3 questions we always get asked are when to start, where to start, and how to start. And I suppose that's what we're here to help our clients with and get things going. So when to start then? So I suppose everyone kind of sees succession planning as later on in life, but really it kind of needs to be considered from the get-go to build up that business and ensure that there is a viable business there for the next generation in the future. So this is just a brief timeline. So just say at the age of 30, you have your kids, they're small, there's obviously no successor identified yet because you still have to put them through school and college, but you have that in the back of your mind and you're trying to build your business to ensure that it can be passed on to the next generation, whether that's 1 child, 2 child, 3 children. It should be, the seed should be sown then at that point. Then as you move along and you're coming to a time where your kids are finishing college, the successor might be after identifying themselves, and other siblings that are non-farmers could be after going through college, and you start really considering the plan then here. And then obviously, of course, the age 35, I think it's engraved in every farmer's brain, is an important age as well. But we always say not the be all and end all when it comes to succession, and no succession plan or transfer of land should be rushed to get into that for that 35 to the avail of the young trained farmer stamp duty is obviously what I'm referring to there. So really, it's the earlier you start, the better. It's putting a plan in place, having a plan there, and these plans change numerous times over the years as life changes and things change on the farm and everything progresses. So we always say, we often meet a lot of clients and they come into us and it's just tax. They're focused on tax and nothing else. And of course, that's what we're there for, to look after. But I'd always nearly say that let us look after the tax and start with your wishes, what you want. Do you want to continue farming once the land is transferred, or are you ready to put the hands up, hang up the wellies, and that's it? You're gone, you're retired. So it really is the clients, what the clients want from it, and where they're starting and where they want to end up. So I always say that succession isn't a single event; it's a journey, and you're working on that journey over a number of years. So how we start then with clients is we meet clients, we sit down with them, we obviously go through all the assets, what they have, what their goals are, what they want, when they want to transfer for the land, and we put a plan in place to get the ball rolling and get to that point of transferring. Once the plan, we have a steady foundation, the plan is in place, then we just review that every couple of years. And obviously there'll be adjustments made over years and we take those considerations into account. And then I suppose another key area is to consider family members that are, I suppose, the non-farmer, and ensure that timing is right when land is transferred, to ensure those family members are looked after as well. And if they have to go through, still to be put through college and stuff like that. So I always look at succession planning as kind of 4 key pillars. Family harmony, obviously, no one wants a fallout or anything like that at home. So that's one key element to consider. I suppose the income from the land and the viability of the land running possibly 2 houses, 2 generations, if the land is transferred over. Is that feasible? Can the farm throw off that income to support 2 households? And also what you want from the farm if you're transferring over. Do you need what you need from it, what you're currently drawing from the farm, and how that difference, if the farm is gone, is going to be made up. Fair deal then, which I'll touch on in a few moments, is another consideration, and to be fair, another one that a lot of clients come in, they're probably their 2 main considerations are tax and fair deal. And rightly so, no one wants a big chunk of the farm.
What's the name of the manager again? What's the share?
Gone to pay the tax man, or no one wants any bit of land or anything to be sold or burdening the next generation is obviously a legitimate concern as well. And then the 4th pillar then is the tax. So I suppose where you're starting from really is your goals, your wishes, what you need from the farm, and what you need, what you're currently taking from farm is what you need, and maybe what you want in retirement. Maybe you need that little bit extra, or you want that little bit extra to go on that extra holiday when you're retired. So it's really important to start with that. And I feel a lot of clients that we worked with often overlook that, and then we kind of mention it to them and they haven't really considered it. But it's really important to start there, because you have to remember that if the land is transferred over and the successor thinks grand, he or she is getting the land, and there's no consideration to change hands, it's harder then to go and look for it after the land has transferred. So I suppose being really clear on what you need and what you want from the start is key there, and ensuring that there's a smooth succession and a smooth transfer over. And then you obviously need to look at what you're currently drawing from the farm, and is the farm able to maintain that and possibly have an extra drawing for another family, another generation coming from the farm. So a good kind of stepping stone there would be considering consideration of a pension or any off-farm income as well that could come into that as well. So again, key to kind of get the ball rolling, starting early, building up that we'll say non-farm pot, and ensuring both your future and maybe the future of other children and the next generation as well. So this is kind of just a common timeline and a nice kind of stepping stones of succession is what we kind of see. And Mary will get to this when she's going through her case later on. But really a good way to start is maybe the successor comes in and gets a wage from the farm. And that's all well and good. They could be in college and they're working away in the evenings, at the weekends, and that's working really well. And then naturally enough, that successor is just identifying himself or herself as the farmer and the next generation to take over the farm, and they could come in then in a registered partnership. So then I suppose with the registered partnership, they're getting that little bit more responsibility and they're included in the business, and it's a good stepping stone to the next generation. And then I suppose a succession partnership then, if it fits, doesn't always fit. So I suppose a succession partnership is just an add-on to the registered farm partnership, where the disowner undertakes to transfer the land at a point in time between 3 and 10 years from when the succession partnership is entered to. So we find succession partnerships really, really beneficial because I suppose it identifies and lets the next generation know that the land is coming, and it's coming at a point between these two times. And I suppose they know where they're going in life, and they know, and I suppose the disowner also knows that, you know, when the land will be going over and when retirement is coming. Succession partnerships are actually not overly taken up within the country. I think there's 160 succession partnerships in the country. So definitely something that should be considered more as well, if it fits. Doesn't always fit in every case. And then ultimately after the succession partnership, you're talking about the land transferring over. Another common question and a common query and worry we see is, what if there is no successor? And I suppose this, as I said, is nearly even more important to get the succession plan ball rolling if there's no successor, because I suppose it's harder and more plans need to be put in place. So there's loads of different options: share farming, partnership, leasing, possible sale of land, or what's quite common is transfer to a niece or nephew. And I suppose, especially with that one, off the back of a few of tax reliefs, there's definitely a lot of planning to be done to obtain tax relief when land is being transferred to nieces or nephews. So again, important to get the ball rolling, get a plan in place in order to get the land over to the next generation as hassle-free as possible. Family harmony then is another key pillar to succession, and I suppose successful succession planning. I suppose it's the expectations on the successor and all other family members kind of need to be identified and clearly communicated. I think communication is key when coming to succession planning. Now, communication at the right time is also key. So it needs to just really give consideration to how the family dynamic is, how it works, how many successors are there, and maybe possibly, like when you're younger and you're growing your business, you don't know at that stage how many successors you have. So it's really just growing that business as much as possible to get in maybe possibly 2 or 3 successors down the line. And then you also kind of need to give consideration to the non-farmers, I suppose, and any non-farm assets that be available to distribute to them. So that's where pensions and investments and shares and stuff come in like that. So it's really, really growing that too, and just communicating from the start, I suppose, what the plan is and how it's going to go. I suppose in cases where we see the most kind of family conflict would probably be cases where mother or father are deceased and the will is read, the land is going to the successor, and I suppose other siblings are feel a bit hard done by, but they don't take into account or remember that they don't have to work the farm, and they got their education out of it, and possibly a site and maybe another few non-farm assets. So it's really kind of communicating as to why this is what we're doing and why we're doing it, and it leads to good family harmony there then. The fair deal scheme then is another one that we see a lot of clients extremely worried about, and I suppose it's definitely one that is a worry and does need to be considered and taken into consideration when succession planning. So the fair deal loan scheme is when you go into a nursing home, you have the option to either pay the nursing home bill, your family pay the bill, or the charge be put against your assets. So the HSE can put a charge of up to 7.5% per annum on the value of the land in the residence, and it's capped at the amount of the nursing home fees, which I think is in around the 60,000 per annum now, and it's capped at 3 years. So quite possible there that if you go into a nursing home and you still have land and a house in your name, that there could be a charge of 22.5% against the assets, which again isn't something that we want to be burdening the next generation with. So it would ultimately mean the next generation gets the land and the house, and a charge of 22.5% against it to the HSE. So that's unfortunate, and that looks like possibly a piece of land being sold to pay that bill, and there could be a tax bill on top of that. So really key to just plan it out and ensure that these things are considered. So with the fair deal scheme, there's a 5-year look back with the from the date of the transfer of the assets. So to ensure that not always possible, but to ensure where possible that the land has gone to the successor 5 years before entering into a nursing home, to avoid those potential charges on the land, because you'd be starting off on the wrong foot, burdening the next generation with a bill like that against it. And then I suppose the tax considerations. So coming to tax considerations last, although they are important, I suppose your accountant will ultimately deal with them and get the best outcome there where possible. Very good relief at the moment, and very, very lucky to have them. For how long more we'll have them, we don't know, but I suppose the considerations then in a transfer of a lifetime transfer of land will be capital acquisitions tax, or gift inheritance or gift tax, capital gains tax, and stamp duty. And one that's sometimes overlooked then is income tax. The changes of income tax once the land transfers over to the next generation. So mother and father could be in a perfect income tax situation, paying little income tax at the lower rate, small bit at the higher rate, and then transfers on to the next generation, whose spouse could be working off farm, and the next thing we could be into higher tax. So that needs to be given consideration as well, alongside obviously the capital taxes too. And then I suppose just on debt or inheritance, there's no capital gains tax and no stamp duty, so the only one to consider there is the capital acquisitions tax. So the capital acquisitions tax, gift or inheritance tax, is the tax the person receiving the land has to pay, and the current rate of capital acquisitions tax is 33%. So we get into quite sizable tax figures if there's a lot of land involved. And currently, a child can get from their parent 400,000 tax-free in their lifetime. So just based on an average farm value of 1.5 million, there's potential for CAT to be paid of 360,000. So again, that's probably a piece of land being sold, or sale sign going up, or you're starting off in a good bit of debt, which we all know that it'll take the farm a long time to repay that. So planning is absolutely crucial here to ensure that relief can be got for the successor. So our main relief, and it's a really, really valuable relief, is agriculture relief. So you probably all have heard of agriculture relief. So agriculture relief reduces the value of the gift or inheritance by 90%. So you're effectively taxed on 10% of the value, which in the majority of cases will come in under the 400,000 threshold and will mean that the farm goes over free of tax. So the main thing with agricultural relief is to pass the farmer test. So it's an asset test. So 80% of the successor's assets have to be in agriculture the day they receive the land. So with planning here, it's crucial because I suppose it's very easy to not qualify for this relief if you have a house and maybe shares and whatnot, a rental house, and times are good. So it's really crucial that planning is done to ensure that the land transfers at the correct time to ensure agricultural relief can be obtained and no tax ultimately paid on the transfer of the land. They also then the successor also has to pass the active farmer test. So they have to continue farming, actively farming themselves, or lease it to an active farmer. And then they have to meet those criteria for 6 years post-transfer, or there would be a clawback of the agricultural relief. Another one then to consider, it's becoming more frequent in recent times, is the use of solar on the land. So a lot of solar companies are now approaching landowners and giving options there of solar. So agricultural relief is still available on land that goes under solar so long as 50% of the land is not under solar. So just a consideration. I suppose just a point to note, no longer relevant, but we got quite a frightened budget 2025 when they announced that they were going to change in the active farmer test, and not only did the transferee have to pass the active farmer test, but the disponer, the person passing on the land, had to pass the active farmer test. And thankfully, with a lot of lobbying and a good bit of lobbying from IFAC as well, those proposed changes got put on pause. They have paused them for consultation, was their wording. What that means, we don't exactly know, but we know they're there, they're on ice. Some change is coming, but we don't know what change. So effectively what that was going to do was take, for example, a farmer transferred the majority of their land to their successor years ago, but held back maybe 20 acres, just maybe as security or whatnot, and but the successor was farming that land with no lease in place, no agreement. That the disponer there in that case would not be seen as an active farmer, because they weren't actively farming the land themselves. They had no legal agreement in place, no lease in place. So therefore that would have completely disqualified the successor from agricultural relief, and would have more than likely ended up with a tax bill for them. So look, that's just something to mention. Not coming in currently, but we do feel there will be some bit of a change there around agricultural relief. The next tax then, I suppose, is capital gains tax, and this is the disponer, the person giving away the land, they're liable to capital gains tax. I always feel that capital gains tax on the gifts of land is a bit of a sore one, because you're giving away the land and you're not getting anything for it, and you could still be hit with 33% capital gains tax. Probably a bit easier to digest if you were selling the land and you had a load of money in your back pocket. You'd pay the tax bill, no problem. So again, 33% on the value of the uplift of the land. So the uplift of from when the land the disponer received the land or inherited the land until the point in time they passed it on to the next generation. Again, good relief currently around capital gains tax. I suppose the main one being retirement relief. So retirement relief is where the disponer has owned the land for 10 years, has farmed the land for 10 years, and is over the age of 55. There's a piece on leasing there as well. They can have leased the land for up to 25 years and still qualify for retirement relief. And ultimately, once they qualify for retirement relief, the land would transfer over free of capital gains tax. So another valuable relief. And again, there's thresholds when you come to certain ages. thresholds on the value of the land that can be transferred. So from the age of 55 to 70, you can transfer land to your child of value of up to 10 million, and thereafter, then from 70 onwards, it becomes, that threshold becomes 3 million, and then from to non-family or person outside the family, those limits are 750,000 up to the age of 70, and then become 500,000 after the age of 70. So again, crucial to keep them in mind and plan ahead and ensure that if we're coming near those limits, that land transfers at an appropriate time to fall within those thresholds. I suppose probably more important for the outside family transfers, so maybe niece or nephew transfers there. And then I suppose the final one, the stamp duty, I think the one that everyone's most familiar with, this brings in the 35 age, which is the young trained farmer stamp duty relief. So stamp duty on land, if it was to be purchased, is our standard rate of stamp duty is 7.5%. On shares and residential property is 1%. And then, as I said, the one we all know is the young trained farmer stamp duty relief, brings it down to 0%, free of stamp duty. And an awful lot of people get hung up on this, and believe it or not, we've had a few cases in that have come in a week or two before the 35th birthday in a big massive rush to get the land transferred over, and we'd always kind of stop them in their tracks and really make them consider their plan to ensure they're ticking all the 3 other pillars that I mentioned, because there's another relief called continuity relief, and that's 1% stamp duty, so 1% of the value of the land, which is the next best thing to 0. It's still 1%, but no transfer should be rushed just to get that through, unless all 4 pillars are considered, and it's really everything has really been taken into account. So they're the stamp duty relief. So I suppose the practical steps then to getting a succession plan in place. So we'd always meet with our clients, usually 3 or 4 times. So the first step and the first meeting is always just meeting with our clients, getting a hold of their assets, putting rough values on their assets, and determining what they want and need and what their wishes are. So looking at the profitability of the farm, looking at their current drawing requirements, looking at their future drawing requirements, will there be a pension coming in, are drawing requirements going to go down, and then seeing what we need from that point. Putting a rough timeline then in place to see where we are and where we need to get to and how we're going to get there. So our first meeting is always us asking the questions and giving no answers, gathering information. Then we go away and put a plan in place from a tax perspective based on the client's wishes, because ultimately it needs to come from the client and be their wishes, and we'll consider the tax then after that. And then I suppose once we meet the second time, we go through what the tax consequences of their wishes are, and we adjust it a bit, and once we keep going then basically until they are happy with the plan we have in place. And ultimately then that's the time then when either if a transfer is happening, to go to the solicitor, or if not, then a will just needs to be put in place to ensure that if God forbid anything happened, that it will go as they wished. And then I suppose it depends on the client, depending on the timing and how soon they're ready to transfer. That plan is just monitored and reviewed every couple of years, and things will change, and we just update it, and again update the will to be included in line with that. And then ultimately the plan is communicated to the family, maybe not in all cases, but where fit, and then it's enacted then at the point in time once the disowner is happy for the land to transfer over. And again, that might look like the registered partnership first, maybe then a succession partnership, and then ultimately on to land transfer. And then obviously considerations given to what happens then once the land is transferred. So I suppose another just point to note, the department released early last year a succession planning grant, not wholly known about. So they covered a cost of €1,500 of obtaining succession planning advice. So just want to note, it's not widely known about. So it's the department are recognising the importance of this work as well. So that's good. So I'm just going to hand over to you there now, Mary. Mary is a client of our office, and we did a good succession plan for Mary, and ultimately ended in land transfer middle of last year. So Mary, you might just talk through your experiences.
Thank you very much, Chloe. I'm Mary Flynn from Rathgormack, County Waterford. We have 3 children. Our son is the eldest, Paddy, Katie and Amy. On the 31st of October 1998, Michael inherited the farm from his father. Shortly after that, Paddy, our son, asked the question, when will I get the farm? He was about 7 years old at this stage, and my husband replied to him, when you're 30 and the girls are educated. Fast forward to 2010, Paddy emigrated to Sydney for 1 year and stayed 9. He decided to cycle home from Sydney in 2019 with a friend of his. They were doing it for 2 children's hospitals, the Sydney's Children's Hospital and Crumlin Hospital in Dublin. And they were also doing ultramarathons on their way. Unfortunately, this adventure was cut short because in 2020, as we all know, COVID came in and they were stuck in India. And he flew home on the 18th of March that year, and he was in isolation for 2 weeks, and he came back to us. He was only living down the road from us, but he came back on the 1st of April, and we had discussed he was taking over the farm, and he completed his Green Cert online. He was very lucky to get onto the Green Cert online, and we spoke to our IFAC accountant, Owen Dre in Dungarvan, on numerous occasions before Paddy's arrival home. I'm sure at some stage he thought that Paddy was just our imaginary son. He had never seen him. But anyway, he came into the partnership with Michael and I, and from there we planned the succession partnership. At that stage, he was 31. And the 2 girls were now educated and were in full-time employment, and they were taken off the books. When we then met with Owen on numerous occasions, and he told us about the tax incentives to help us plan the way forward. Paddy was totally informed about all the finances on the farm, and he was willing to take it over, which guided us forward. We met Owen and Chloe from the IFAC office in Dungarvan in December 2023. From there, we started the succession process. At this stage, we were advised that Paddy would need to employ his own solicitor, and we'd have our own solicitor. And Paddy's solicitor did most of the work, of the transfer work. Michael and I had to approach our own solicitor, and then we consulted them on the transfer. On the 16th of July 2024, we signed the farm over to Paddy. On the 20th of July, which was Paddy's 35th birthday, he became the official owner of the farm. Michael had said early in the time, there can only be one boss, and that is Paddy. We're now his employees, and this is working extremely well. Michael gets a day or 2 off a week, and holidays. Paddy also gets time off too. In the meantime, a new shed with housing for 44 animals and a new milking parlour has been built. It's fantastic to be able to help out and watch the next generation bring new ideas to the farm and to work the land. The legal process is very slow in this and has taken up approximately 6 months to complete. But there was one thing that really surprised us. It was the negativity response we received when others found out about the transfer of the land. We thought it was important to look at it from our son's perspective in relation to the family financial security going forward. The financial incentives that IFAC informed us about were very important in our decision making and helping to make all this possible. We availed of the tax relief, stock relief, young farmers installation, aids and grants. And as a result, Paddy inherited the farm. We made the decision to gift our 2 daughters a site before he inherited it. So one of them has a house and the other is in the process of building a house. So that's our story, and it is working out very well. Thank you.
Thank you so much, Mary. I have a few questions for you, Mary. You said, were yourself and your husband in an existing partnership?
Yes, we were in the existing partnership.
Okay, and tell us a little bit about that. How did that work?
That worked very well. It was Owen advised Michael that I'd go into the existing partnership. I'd say, however long Owen is in Dungarvan. I'm not too sure how long he's in Dungarvan. We were always with IFAC. No, when Michael took over the farm, they had other accountants, but they were the family kind of accountants. And I knew the guy in IFAC at the time, John O'Grady. I had dealt with him. And I said to Michael, why don't we try IFAC? And he said, okay. So we did. And we went to IFAC. And since then, everything has worked out very well.
And the advisor, and Mary, was there a special grant at that time for women in farm partnerships?
No, it was that I'd get a pension when I'd come to 66, okay. That I'd get a pension because I had left. You see, I worked in a family business where there was family PRSI in those days, and you got very little from it. But I had stamps, as they called them, going on forward. And then it was Owen said that if I went on to the books, I would get a pension, which I will avail of this year.
Okay. And
I get the full contributory pension, like. Excellent.
And Mary, were your 2 daughters involved in the succession discussion and planning?
They were. They both worked on the land. They minded the land while we went to Australia. They kept it warm for their brother. That was the way they worked. He knew every cow that calved, everything that happened here, all through the years in Australia. But they both worked on the farm while they were in college.
Okay. And so they knew exactly what the plan was. They were involved in it.
Yes, they were involved, and they were very happy at him getting the place.
Excellent. No, because Chloe made a reference there earlier about, when the will is read,
yes.
A lot of people aren't aware of what's in the will. They haven't a clue. Chloe, would you agree with that?
100%, yeah. So it just shows the importance of communication and being open and transparent about it, to avoid those conflicts, possible conflicts in the future, so it definitely is the key to it, is communication, and you saw that yourself, Mary, in your process.
Yeah,
it was key.
Yeah. Key. And even now the 2 girls, the sites are, one of them is about 3 minutes away from where we live, and Paddy is living down in the farmyard, and he's married with a child. And my other daughter is about 5 minutes up the road. They're all on the land.
Okay, and so everybody knows where they stand, literally.
Everyone knows where they stand, completely.
Okay, and your son did the green cert, Chloe. That's to qualify for the capital acquisition. No, that's for the stamp duty relief.
That's the green cert only comes in for the stamp duty relief. Yes. Yeah.
Okay, just for the stamp duty relief. Okay. And Mary, what was his experience of doing the green cert online?
He thought it was brilliant because he could work on the farm as well. Because at that stage we were putting in roadways on the farm. We had such a discussion with him that we hadn't done much work. We'd built 1 shed on the farm since Michael got it. But we left him continue on. We were milking 60 cows when he came home, and we're now milking 108.
Oh wow! Okay, that's great progress.
He has built it up completely, and he knows he has everything on apps and all the rest.
So he has a vocation for the job.
Oh, he loves it. He absolutely loves it. He was told actually in Australia he was mad coming home to farm. When he said he was coming home to farm, he was mad. But he loved it.
Excellent. So everybody's happy. Everybody knows the plan, and everybody is happy with the situation.
Yes, That's right. Yeah.
That's an ideal outcome. And you also mentioned there that your son had his own solicitor. How
Yes.
important was that in the whole mix?
It is very important that he got his own solicitor, because he did an awful lot of work, and he's still operating with the banks. He had to get the banks sent out a consultant to do planning on all the sheds that were here and that, you know. As you know, we could produce planning for the shed that we built in 2003. But going back previous, maybe to the 70s and that, we had no planning. You know, we couldn't find planning, and we had to get a consultant for the bank to be happy with the buildings.
And
yeah.
And and the fact that he was in this new partnership with meant that she qualified for a higher ceiling on grant aid.
Yes.
Is that correct?
Yeah.
Okay.
Yes. And in fact, Michael got the first grant with him to build the shed, and I got the second one. I got the women's grant there. It has come through now to do the milking parlour.
Okay, wow. And so what would your advice be to people? How much time do you need to get something like this in place? Is it something you can come up with like for 6 months down the line? How long out do you think, in your experience, Mary, do you think?
Our experience was from April 2020, we were discussing it, to July 2024.
Okay. And
Chloe, I suppose, Mary.
Sorry.
Yeah, go on. Yeah, Chloe. Yeah.
Yeah. No, I suppose, Mary, I was just going to say, like, really say from when we knew the transfer was going ahead. So when you said you met with us in December 2023, you still had that nearly 6 months before, once we, like, all the tax was cleared up at that point, and then I suppose it was still 6 months before the transfer was actually, the land was actually transferred. So as you said, the legal process, the solicitor side of it as well, that's quite a long process too. So I think people sometimes overlook that as well. Like that's definitely a 3 to 6 months process at best.
It is, yeah. In fact, that has only been finalised now, kind of thing.
Yeah.
You know, so that's 6 months again later on, like, you know.
Yeah.
And Mary, you mentioned there that there can only be one boss. How did that transition work? Were you ready, really, were you at the right point in your life to hand over?
Yes.
How's that working out? You know, he's a young person, you know, making mistakes that we all made, you know, in our own time. And now we have to stand back and watch them. How is that dynamic working?
It's working very well. I still do the accounts from. He comes in to me. The milk check comes in on the 9th and the 25th of the month. And we write down, as I always did, who we're going to pay and what we're going to pay and all the rest. And it's working out very well. The wages are done every week. You know, I do them every week. And he knows exactly now. I deal with the account. I have the app on my phone, and I show it to him, and there's no problem. And
out in the yard, how does the dynamic work? Because I think we're all, as women, you know, in the mix, you know, we see everyone's point of view, but maybe other people aren't so good at seeing everybody else's point of view. How is that working out for you?
It's working out very well. It's working out very well. Okay. Because Michael just takes orders from him. We take the orders from him now.
Okay. Okay, wow. So you're
I suppose that was one thing, Mary, as well, that you were clear from the start as well, was what you wanted from it after when the land transfers. So that's where the wage comes in. The wage works well, and the partnership continuing as well. And you just draw in your wage every week, which was made clear from the start. So Paddy was informed as well. So again, communication is key there in to facilitate that.
And Mary, you mentioned something there about negativity. I didn't quite understand that.
Oh yeah, the negativity from the neighbours, from our own families. You know,
because you were transferring over the farm?
Transferring the land. Like Michael's dad was 82 when he transferred the land. Okay. And all of a sudden he's only 60 when he's transferring the land, kind of thing, over 60, you know, and why do you do it? And like, because you want to see the next generation. At 35, you're able to do a lot of work. At 55, you're not, you know. And yes, and see, we're living where there's a lot of kids around the same age, and they kind of, a simple little thing that when they were all 17, they learned how to drive, because I was taught how to drive, and I had a car when I was 17. And we were living in the middle of nowhere, so they could drive to school. And like, one neighbour met me one day and said, "Why have you given the girls a car?" Well, that car belonged to Paddy. When he was going to Australia, he gave us the car to give to the girls. You know, it was only a banner of a car, and they had it, like. And I said, you know, like, it's kind of none of your business what we're doing, like, you know.
Yes, but I suppose getting back to people questioning you handing over the land, I mean, you have to be commended if Michael's father didn't hand it over till he was in his 80s, and now Michal and yourself have the foresight to hand it on at a much earlier age. Well, you know, that's great foresight, you know, and fair play to you. Like, he didn't own it in his own time. But I suppose, would the issue be from people, Chloe, would you see that people are scared of passing over their assets from a security point of view?
Yes.
Yeah.
The big thing was, I wasn't going to be Mrs. Flynn of Knockloughlin anymore. You know, that kind of thing. That I wasn't going to own the place. I wasn't going to have the power to own the place. This is what I felt. That to go, why was I giving it to my son and his wife, kind of thing.
Okay. That you were losing your security, but
I was
you
losing
were. Yes, but absolutely. Sorry, Chloe.
I'd like to see the younger generation, and to be able to live to see them take it over, and you know, and to be young enough to say, look, this is what I would have done, but you can do it differently, but this is what I would have done.
And I suppose you were coming from the point of view from all the, you know, from all those different taxes and stamp duties that just have to be navigated. Like, you got excellent advice from IFAC that, you know, no way would you have been able to navigate all that on your own. You needed experts to guide you through that minefield. Chloe, you know, it is a minefield.
It is a minefield.
It is, I suppose, and that's, I suppose, that's what we're here for. And at the end of the day, that's our job, and we looked at after that. But all, as I said, the other pillars do very much so need to be considered, and that's where it comes to your considerations and what you want, and let us worry about the tax then as well. Obviously a key factor to it, but again, communication is key. Starting early is key, because once you start early, you're just opening all those doors. And you're not shutting yourself off to any relief they could have passed an age for, or you know, a threshold is met or exceeded or anything like that. You're really, the earlier you start, the more opportunity you have and the more reliefs that are available to you. And I suppose the more planning you can do and build a better succession plan. So it really is key.
Well, I think
the fair deal was another problem that, you know, we didn't want to get 5 or 6 years down the road having to end up in a nursing home, maybe get a stroke, dementia, anything, you know, and for the government to take the land office, kind of thing.
Yeah, absolutely, and that's another complicated scheme, you know, Chloe. More planning required there as well.
Exactly.
Okay. What was I going to say? Has anybody any questions they'd like answered? Linnea, have we any questions in the chat box at the minute?
Yes, Mella, we do. There's a couple of questions there to Chloe. Is going into succession partnership recommended, Chloe? Is that the recommended path?
So I suppose it's not a one size fit all. Every case will be different. It'll depend on your individual case. I suppose another thing with the succession partnership works well because it's a nice kind of, I suppose, a comfort blanket, as in the successor knows, okay, I'm getting the land, and I'm getting the land in the next between 3 and 10 years. I suppose a lot of cases, and they're probably years ago that the successor maybe didn't know. They weren't 100% sure, and they're working on the land, and they're doubting, am I getting the land? When am I getting the land? So I suppose the succession partnership gives that comfort for all parties. And I suppose on another side of it as well, there's a nice incentive for the succession partnership because it gives 5,000 of tax credits for 5 years, so 25,000 obviously in tax credits for entering into the partnership. So another kind of incentive to drive it. And I do really feel that they're a good mechanism for getting that stepping stone over to ultimately ending up with the transfer of the land. So yeah, they are good, but again, it's case by case basis. What might work perfectly for one family, it mightn't work for the next.
Thank you, Chloe. And also the second question just there, and please, anybody do type your questions into chat and I can relay them or Mella might pick them up. And also there is a raise hand function that we're watching for you. So any questions from participants, very, very welcome. Chloe, the second question just sitting there is you mentioned about the advice in the specific situation of niece and nephews. Can you just recap on what you mentioned there, please, regarding the capital gains for this scenario?
Yeah, so I suppose if the transfer, and we see a good few of these cases where the transfer of the land is going to a niece or a nephew. So there's another good relief there, and it's called favourite niece or nephew relief, where ultimately when certain conditions are met, it'll recognise a niece or nephew as a child of the disponer, so the child of the uncle or aunt, rather than a niece or nephew. So the difference there is the tax-free threshold. So a parent to child can give 400,000 tax-free, an uncle or aunt to a niece or nephew, it's 40,000 tax-free. So substantial difference, and especially then when you're talking about land and the average value of land increasing as time goes. So I suppose it's important to plan that one early, because one of the conditions for it is that the niece or nephew has to be working for the uncle or aunt for 5 years prior to the gift of the land or the inheritance. So again, planning, timing is crucial there for that one as well.
Thank you. Very, very, very specific things with, you can't just say you're my favourite niece or you're my favourite nephew. It's
unfortunately not.
No, much more specific. Thank you. A further question, what do you think of multiple farm partnerships? What are the disadvantages where there are 2 milking platforms, 2 herd numbers, please, and only 1 successor?
Yeah, so I suppose again, in terms of planning, a lot of planning to be done around it. I suppose different things you're touching off there. Maybe you're considering the reliefs, the thresholds for the reliefs, ensuring that all the boxes are ticked for them all to ensure that they can be obtained. So really, again, comes down to a case by case specific basis. Would have to be kind of drilled into further, looking at reliefs, but not writing yourself off for anything at all, given that there's 2 partnerships. It's still completely open to relief if planning put in place in time.
Thank you. And another couple of questions, and I'll hand back to you, Mella, because I'm sure you've got plenty of questions. Oh, they're actually flying in there. If your son has his own house and is due to inherit the home farm house as it is in the middle of the farm, are there any implications as in regard to the principal private residence, etc.? And the same person has continued on just there. Is there an insurance that one's son can take out to cover any taxes that may be incurred on takeover? Is it advisable or just really to be decided when the accountants has had a look at the tax implications? So there are 2 very intricate questions, one about the home ownership and the second one about insurance around taxation.
Yeah, so I suppose, again, case specific, and feel free, I'll put my email up at the end if you want to email me on any of these queries, but just on a brief and overall, what you're probably referring to there is the agricultural asset test. So again, inheriting the farm with the farmhouse, if the farm goes with the farm, or sorry, if the farmhouse goes with the farm, it can more than likely will be seen as an agricultural asset. So again, can avail of that agricultural relief and transfer over 10% of its value. So that will come into your agricultural side of your asset test. The principal private residence, the non-farmhouse we'll call it, that obviously comes in as a non-agricultural asset. So again, it'll depend on the value of the agricultural assets and all other non-agricultural assets, and ultimately if that 80% asset test is met. But again, if off the bat it's not met, loads of tax planning opportunities there to pass that test. So wouldn't be writing it off, but again, case specific, and can't give an exact answer without knowing the details. And then on the payment of the tax, that could be considered again case specific, and more than likely it's usually the disowner that takes out a policy to cover the tax, but again case specific, and it could be looked at as well.
Thank you. Another question: how does the transfer of an agricultural company impact or interact with agricultural relief? Are shares in company counted as non-agricultural assets in the hands of successor, meaning they may not meet the 80% agricultural assets threshold?
Yes, so shares are unfortunately non-agricultural assets. So although the shares in the company, and the company is made up of the livestock and whatnot in the land, they're seen as non-agricultural. So there's another relief there that's quite similar to agricultural relief, as in it works in the same way. It gives a 90% reduction, and it's called business relief. It's more so aimed at the publican and other business owners, but farms are very much so businesses. So business relief could come into play for the transfer of shares in a company, and again gives the exact same reduction, the 90% reduction in the value of the taxable value of the shares in the company. So again, case specific conditions need to be met there. Company needs to be in existence for a number of years before and carried on for a number of years after. So very much so non-agricultural, but again, reliefs are luckily available there.
And the last question, I'll just pop to you before, Mella, I'll hand back to yourself. Two questions here, both when your farm is set up in a limited company. The questions both are about that situation. Can you set up a registered partnership, or is this different as a sole trader set up? And does succession planning work in the same way when you have a company?
So to tackle the last one, anyway, the succession, it does work in the same way when there's a company. Maybe possibly even more important when there's a company, because as I said, they come in as non-agricultural assets, so we'd have to look at the business relief. And again, capital gains tax, as you remember, retirement relief, the assets had to be owned for 10 years. So possibly with a company, the company might have only been set up in recent years, and a transfer is happening, and that 10-year mightn't be met. So considerations need to be made there to ensure that retirement relief is available. So that should be considered. And then in terms of the registered partnership in the company, again, that have to be looked at and dug into more detail just to see there.
Yeah, actually, if I can come in there, actually, in our own case, we set up a company. Well, we had two companies in a partnership. It started in April in 24. So we'll have our shares will be at the 10-year threshold in April 34. And our eldest son, who's one of our successors, will be 35 in October 34. So, you know, we'll just about sneak in, you know, get in under the timeline. And like we thought we were going about our succession plan in lots of time and getting everything in place, but it'll be just about, we'll just tick the two boxes just about, you know. So you can never really,
exactly, Mella, you know? Exactly, it's key. As I said, the earlier the better. It leaves all those doors open, and you're lucky in that case, but it could very much so have run a month too late, and you know, and wouldn't qualify. Do you know?
Absolutely. And you know, you talk about early, you know, since our kids, before our kids could understand, the three kids, I always said, if the three of you want to farm, if none of you want to farm, that's fine. We'll find a way around it. Once you're financially independent and you love what you do. And I've always said that to them, and from before they could understand it. So I think you know, my experience of succession and being a woman in a male dominated industry, a lot of lads, you know, will come talking to you, you know, the amount of farmers who never have the conversation. You know, you talk about the birds and the bees conversation, they never talk to their successors about, you know, what's going to happen next. A young couple that I know constantly giving out about his parents, and I say, I don't want to hear it. You never sat down and ever had a conversation about the whole thing, you know, and it's absolutely key. There's so many stories around here of families that have fallen blackout because they didn't know what was in a will. And then when the will was read, you know, all hell broke loose. You know, and as women, we have a vital role in getting the communication, getting the ball rolling. It's not easy to do because really we don't know where it's going to take us. But we have to sit down from an early stage and start the conversation around the dinner table. You know, what do people want? What do they expect? You know, where do they think it's going to go? What do you think, Chloe?
100%, Mella, and like I appreciate that it's not an easy conversation to have. It's not the most fun of a topic to be talking about, but exactly what you said, the earlier you start talking about it, the better, the more open the communication is there, the less likelihood of fallouts, and it just allows for a steadier and more smooth plan and transition over to the next generation. So it's ultimately the key is communication, and in a timely manner.
Can I ask both of you ladies, Mella and Chloe, initially, why do you think succession why are people not addressing that? Why is it put in the back room? What do you see as one or two of the major deterrents from people actively approaching this?
Well, I think people in a lot of cases, you know, farm viability is one thing. They don't know how they're going to spread out all their assets among all their children and keep everybody happy, you know. And in a lot of cases, they look at the pot that's there and they don't know how they're going to stretch it. And so they just kick that can down the road and they don't have that conversation because they don't know what to do. And I've seen several cases of people dying intestate and having no will at all because they couldn't decide, they couldn't grab the bull by the horns and decide, you know, what's the best plan of action, to sit people around the table and decide, you know, what's the best thing to do. And I think as a nation, we're not great, and definitely in Ireland, we're not good at talking about these things. Maybe it's different in New Zealand, Linair. Do people, you know, talk openly, have they a more open approach to succession planning?
Yes, I do think it is quite different, and it's probably because 20 years ago, most farms were single operator families, but now businesses have got so large that there's a big gap now between the knowledge of the parents that own the business and the incoming successor. So they're frightened of how to run the business. So we have to address it differently. And it's very clear we have very equal distributions between girls and boys. And so the family has to make some fairly hard decisions straight up. How will we run the business? And it is seen as slightly more of a business than we're not as attached to the land as Irish. So that's a disadvantage that we have, but we have to prepare our young people for managing the big businesses. I think the key thing I would be focusing on Ireland that every person can do today is driving a profit from their business, really looking at how their business is performing so that there's a huge difference between those whose business is ticking along and those who are driving a profit, because that will give choices in the longer term. So if a farmer makes a good return from their business, they'll have more choices in 10 years' time, a bigger asset to evolve. Chloe, I've stepped in there over yourself, just commenting, why do you think people don't address this in a more timely manner?
Yeah, as Mella touched on it, it's 100%. It's not even either having a big enough pot to split and wanting to be fair, or back to that, putting it on the back burner, not wanting to have that conversation and hoping it kind of goes away and then ultimately ends in someone dying intestate and leaving an awful mess behind. We always say any will, a bad will, is better than no will at all. because it having no will just leaves open to fights, and it's ultimately the land could be sold or split, and it's not feasible for the farm going forward in the future.
We'd be very interested if anybody wants to put in the comment box what they think the reason why the conversation is taboo and people is the elephant in the room. We'd be very interested to hear your thoughts, ladies, and what you think. Mary, Mary, what are your thoughts on why is there such a taboo around succession, the conversation?
I think the older generation don't like to talk about debt. You know, they don't want to discuss what will happen. And to something that we have discussed what we want to do after we die. I want to be cremated, I don't want to be buried, you know, and the kids know that. And my father always spoke about debt. I suppose being from a newspaper, we kind of saw, he brought us to see accidents and all this, and we discussed debt and wills and everything. But from the very time I married Michael, we made a will. The minute we had a house, we made a will. And then when I had the children, I made a will, and my brother-in-law was living in Belgium, and he said when we had our first child, oh, if anything happens to you, I'll take Paddy. And I thought, Jesus, no, he's not going to Belgium, like, you know, I want him left in Ireland, like.
Okay.
And I think that I always had a will. Even today, we went and we changed our wills now that everything is the girls are sorted and Paddy is sorted, and just little things like jewellery and little things that we have, personal things. But I always had a will, and I think a will is important. And the girls, they know exactly what's in our will at this stage.
Okay. Thank you, Mary.
Can I say a question,
Ella?
would each of you care to just outline advice on how to start the conversation? So how do you suggest, Chloe and Mella and Mary, how would you start the conversation? So imagine a participant on the call, they might be the daughter-in-law, they may well be, you know, the older generation or the younger. What way would you start the conversation? Chloe, Mella and Mary, I'll take you in that order.
Yeah, so I suppose, as I said, it's really starting, I suppose, considering what your wishes are from the start. And then just like that, like as Mella said, like having these conversations, casual, informal conversations around the dinner table. It doesn't necessarily have to be this big family meeting called, and it's very serious, because that probably makes it a bigger deal than what it really is. These casual conversations, sitting around the dinner table, putting it out there, and just getting the feelers first, and then at least you have a bit of, you kind of know where you stand. You have kind of an idea what everyone else is thinking, and look, ultimately at the end of the day, it is your decision. But at least you know where the other family members are standing and how they're feeling. I don't know if that's what you kind of think, Mella, or what do you think?
Well, I think it's very important as well. You know, for me, it started when they were young, as I said, before they could understand what I was raving about, okay? But it's very important that none of your children feel that they have to farm. I would never want to burden any of my children with the assumption that they have to farm, no matter how good or bad your farm is. You know, I had always said that you're financially independent and that you enjoy what you do. You know, you could have the best farm in the world, but if your son or daughter hasn't a vocation for it, it's very important that they don't feel that they have to farm, that everybody assumes just because they're the son or the daughter that they are going to be the one. Life is too short for stuff like that, you know, and I love what I do. My husband loves what I do, and we hope that the next generation have a career that they enjoy as well. Like the job that we're in it's a vocation, so they have to love it. They have to really want to do it. And I think that's vitally important as well. So from a young age, let it be part of the conversation, you know, that, you know, if all of you want to farm, if none of you want to farm, we'll work around it. Once you're financially independent and that it's what you want to do, that is critical. You know, there's a big conversation now about lack of successors in Ireland. I firmly believe a lot of it is to do with generations of men that were forced to farm when they had no vocation for it. They hated it. You know, the country's full of people like that, unfortunately. And they were so unhappy at it, they're actively discouraging their families from it. They didn't turn out to be good farmers, they weren't inspirational in what they did, they should have been something else, in fairness to them. So it's vitally important for the industry that people with the vocation end up farming. That's my spiel.
It's a very good point, Mella, that you make. We also need to, as farming families, need to show farms that aren't drudgery, because it's very a noticeable comparison between New Zealand and Ireland is that young women and younger people are not going into farming, often discouraged by their parents, whereas we have a number of young people coming into the industry. I think 30% of our young workforce are women coming to farms, and that's because we've got demonstrated profitable systems, that it's not the drudgery of the commitment to the farm business all the time. And so each of us on the call can make sure we've got simple systems, that we're taking free time, making free time. You're coming into calving, you're not going to have that, but after that you regain your holidays, your weekends, your time with family, to demonstrate the great businesses that farming is. Mary, did you have anything just to say there on how you?
I agree with Mella there. I agree with Mella. You must love farming to take it over. There's no good just saying, I want to do it because we have it and nobody else is there to take it over. You must love the job. You must be willing to put in 24/7, 365 days of the year into it. So you must. There's no good just saying, oh, I'll give it to a daughter because she's the eldest or she's there, you know, and forcing her to take it over.
Absolutely. There's so many other options. You know, the world is a big place and there's other careers out there. So you have to be sure that, you know, don't assume that any one of your children will or won't farm. You know, leave it as an option to all of them that they will or won't, you know.
Yeah, right.
Mella, the question you asked there has a number of answers come through. I see, I don't know if you can see them there. I think Augusta's written, she thinks the fear from parents' point of view is seeing that they favour one child above another. And if you wait a little bit longer, it gives time to tease out how the children will cope with the parents' choices. So, you know, you can discuss that. Mary's written, not trusting the children to make the right decisions. They're children until suddenly one day they're old men and old women. So also the fear of the spouse and marriage stability. So good points there from Mary. This is inhibiting people. Catherine has written, the fear now of letting go after developing the farm so late in life. Catherine had earlier written inheritance was late, they've made the farm profitable, and it's now a fear of letting go. No other hobbies, no other interests, and keep working in the happy place. So that's a real issue. People, our identity is so formed around who we are that we don't develop other interests. And it'll be interesting, Mary, to hear how you and Michael have developed other interests, that it's not all consuming. Afraid to upset or to have a favourite son or daughter, and need to give the son or daughter time to live life themselves, and see where they're waiting to be. So also children having very good professional careers and getting a high salary and a different lifestyle. So they were some of the people's answers, Mella, to your very good question prior.
Yes, and the retirement one is absolutely huge. You know, Chloe, I'm sure you have lots of experience of people, you know, from your side who are going to retire and have absolutely no plan of what they're going to do afterwards.
Exactly, yeah. So I suppose again that comes back down to the communicating and understanding what you want from it and what you see happening once the land is transferred. Like in some cases, maybe it's just like your case, Mary, the partnership works really well because you're still involved in it to however much of an extent you want to be. And it still gives you access to the wage from the farm. So some cases it's like that. It's like that role reversal, and the successor becomes the boss, and the parents take that step back while still being involved. So it's getting that balance right, and I suppose communicating that from the get-go and what's wanted after and what's wanted for retirement, I suppose.
Yeah. So as part of the plan, what is your role going to be in the farm? You know, when
Exactly.
ownership changes.
and what does it look like when the land has transferred? What do you see it looking like, you know, or what do you want it to look like, I suppose?
The answer to that question must be so different for every person. So somebody who's very active and can't let things just pass by, they may be better moving away from visual sight of the farm, you know, and so for that person, it might be really good that they move off the farm or, you know, do drop the reins totally and step away. But for someone else who can work alongside their family members, gosh, how many grandparents and parents are the world's best assistants on the farm for minding children, opening gates, you know, and doing some of the other work. Mary, would you comment on how yourself and Michael's role has changed, and how does Michael manage if Paddy's put the cows in the wrong paddock or isn't quite taking the silage off at the right time? How do you resign yourself to that?
What would I say? I suppose Paddy does it exactly the same way as his father. He'd be very like his father, you know, but he'd leave him do it. He knows that we cut the silage. We actually used to cut the silage in the middle of June. Now we're cutting it in May. And Michael is saying to me, this is a better idea. You know, he's actually saying to me, this is a better idea, because now we're ready for the second cut of silage, which will be the end of July, early August, you know. And things like that, that he has more time to, like, we have a grandchild and we have more time with the grandchild now, you know, and there's different things. The cows are going to start calving. They might calve tonight. The first one might calve tonight. There's due, but they'll be finished hopefully on Patrick's Day. That is going to be hard work for the next 6 weeks.
But you'll be finished up here.
We'll be finished up early, because Paddy's idea is, like, the milk will start coming in then in earnest in April, like, and you know, it'll be good. But like things like that, we used to leave the cows go from February until maybe May. You know, there was no rush with them, actually. And like, we're doing a lot of sex semen. We breed all our own heifers. We keep all the heifer calves, and we get rid of the bull calves. And Michael brings them to the mart, or I bring them to the mart. When I used to bring them to the mart for Michael, when there was only the two of us here. But now I'm kind of made redundant that way. But yes, I'd be bringing soil samples up to Cappoquin, or I'd be bringing something down to the lab in Kilkenny, or, you know, I'd know places like that I do that work still. Like,
you're still a vital cog in the whole machine.
Yeah, that's right. Yeah, I'm still working.
But you're enjoying it.
I'm enjoying it.
You're enjoying to be involved, and it's nice to stand back and let somebody else make the decisions, and you're excited to see the next stage of development of your farm. That's right. That's right. And you're happy to see progress. I'm very happy to see progress, and I love going to hurling matches. I always took the Sundays off. I went to all the hurling with the Waterford hurling matches. Now Michael can come with me. Oh, he used to be able to come because there was only the two of us, like, you know. And now he's able to come because we have somebody else. And what the way they work the calving is, Michael might work on the night shift from midnight to 6 o'clock in the morning, and Paddy do the daytime or whatever. Okay. They'd see how they'd work. And it's just working out well. But Michael is a very cool type of guy. So maybe it is just that it works out well with him. Of course, a lot of it too is personalities, you know, and you know, we're all different, which is great, but you know, not every combination works out, you know. No, it doesn't. And, no, it doesn't. You know, would you see that, Chloe, as well?
100%. Yeah, yeah.
It's to do with personalities and what people want.
Melly, have we got time to just pop in this question there from Tegan? What are your thoughts, Chloe, on farming retirement scheme or going into succession partnership? So could you comment on the farming retirement scheme, please?
I suppose, yeah, look, it's another consideration. And again, I sound like a broken record, but each case is case specific, and like I do really feel like the succession partnership just works really, really, really well, and definitely something that should have more of an uptake. Again, a good stepping stone to the land transfer, and I suppose the income tax incentive there as well. And I suppose it, in a way, it kind of addresses some of those questions that came in as to why the land isn't transferred sooner, and the whole, I suppose, being afraid that the next generation won't do it the way you always did it, or the right way, or whatever. I suppose the succession partnership works well there because you're working in conjunction with each other, and it allows the owner to kind of to get a feel for how the successor would operate the farm going forward. So a nice kind of transition period, if you want to call it that.
Can I just ask one last question, Mella? I'll leave to you to bring this evening to. We haven't discussed too much, and you've mentioned before, Chloe, this is an issue where there is no successor. So what are some of the ways of approaching, you mentioned that briefly in your presentation, but some of the ways of approaching when there's no obvious success, either no successor or no obvious successor, for, you know, what things are evolving these days to address that?
Yeah, so I suppose they're ultimately harder cases, and again, very different, a number of different cases, as in there could be no immediate successor within the family, and again, how do you split the land between maybe 3 or 4 kids that none of them have any interest in it, and again, fairness there, because we all know the more kids that are there, and the more land could be sliced and diced, it just becomes smaller and smaller parcels of land. So not very viable. So that's a hard case. And I suppose a case then you could have that there's maybe a bachelor with no children, and again you're bringing in the nieces and nephews there, possibly. So it's really just trying to work with them. And again, those ones are kind of case sensitive and harder at times, but the majority, I've yet to come across a case where there's been absolutely no one. Usually it is the niece or nephew, or even maybe just a complete stranger, a family friend or something like that, as in seeing a stranger from a tax perspective. But those ones are key for planning, because as you know, the more the relation goes out and the more distant the relative is, the lower the tax-free threshold. So really key for tax planning around that, and ensuring that reliefs and all are obtained. So again, timely manner to ensure they're all the boxes are ticked for them.
Are you seeing leasing playing a good position there? So leasing may help fill the management gap for the land, provide income, etc., until perhaps a future generation may take the farm business some other direction. Is that providing a good operation?
100%, yeah. So there we would have a good view that stepping stone, that leasing before the land is transferred over, for the next generation to, in some cases, lease. I suppose the leasing is very attractive, and it provides the farmer with that tax-free income for a number of years if there's no successor identified, or if the land is being split between 2 or 3 kids and they'll ultimately be leasing it themselves. It's nice for, after working the land all the years, to take advantage of that lease income yourself before transferring it on, and ultimately that lease income becomes the next generation's income. So that's a nice gap as well to bridge as well, when it's not a successor taking over the farm and farming themselves, I suppose.
You mentioned earlier that there was 48%, I think you said, had no successor identified, and unfortunately in this country, Linear, we don't have as many collaborative farming businesses as you do in New Zealand. Like, there's so many older farmers who maybe physically aren't able for the work anymore, but still don't want to completely step back from farming. And I think it's an opportunity missed that there aren't more young people in collaborative business arrangements with older farmers that want to step back from farming, but not totally. You know, I think there's a lot of young people out there who have no access to land, who would be brilliant farmers. They don't have to be farmers' children, they could be from the city, from the town. And I think it's a pity that we're not more open to those sort of arrangements, in my opinion.
100%.
But,
yeah, I agree.
We're not as open to it here, you know. Okay, ladies. Wow, such an amount of information there. So grateful, Chloe, for giving us such a fantastic presentation, so much information. Thank you for giving us your email address there. If anybody there's any specific query, thank you for allowing us that. I really appreciate that.
Thank you.
Mary, thank you so much for coming on and speaking about your own family's experience. You know, you're a shining light to do that, because that's what we're so lacking at this job, is people who are prepared to speak about their own situation. So thank you so much for that. And ladies, thank you so much for joining us tonight. Thank you for having so many questions and queries. Obviously, this we could talk all night about it. There's so much content here, but we can chew on all we have done so far. Can I just say that we all have a busy few months ahead. Take care of yourselves, take care of each other. In Dairy Women Ireland, we're here to, you know, as I say, to help and support and learn from each other. We'll hope to have a couple of more Zoom calls over the calving period, just if you can make time to join us, and just for a relief for an hour that we can share our thoughts, we can let off a bit of steam. Ladies, thank you so much. Take care, and be careful in the storm, okay? Don't take that risk. Stay in while the red warning is on, okay? Thanks, everybody. Good night.
Thank you.
Thanks a
Bye.
million.
Thank you.
Thank you.
Thank you.